Hi everyone, this is AJ speaking. It's now 14 hours after NVIDIA reported second quarter results. We are still in pre-market trading and NVIDIA is currently down roughly 2%. I will make part of this video widely available without time delay, but in order to be fair to my subscribers, the high value observations of this analysis I will have to retain for my subscribers. So if you listen to this and haven't subscribed yet, I highly recommend you go to X, go to my handle, which you see down here, Alojo, and subscribe to my account. With that out of the way, let's dive right in. So in front of you, you see total revenue as reported in dark blue, and in this light blue color, you will see management's guidance. So this is not my estimate. This is what management told us they expect to deliver. In the second quarter, revenue was up 56% year over year and 6% quarter over quarter. And management guidance implies a re-acceleration in growth to a year over year growth rate of, a sequential growth rate of 16%. And that would imply a still super strong year-over-year growth rate of 54%. However, management heavily caveated that number, or I should better say sandbagged. Management explicitly said this reflects estimation of zero H20 revenue, but they were quick to point out should licensing issues be resolved of China buyers who already have received licenses, there could be another 2 to 5 billion of just China H20 sales. It is not reflected in these numbers yet. They also pointed out that there might be other H20 buyers, but it was clear that the 54 billion does not include any H20 sales. For this reason, you will see later in this presentation two scenarios. One scenario which will just reflect the 54 billion of current guidance. And then there will be another scenario which will reflect a probability weighting of the midpoint of the H20 guidance. And specifically that means 3.5 billion, i.e. the midpoint of 2 to 5 billion guided, times a 50% expected value. And then that number is adjusted for the 15% tax that the current US administration imposes on NVIDIA's China sales. But I will discuss this in more detail later. Next, we need to understand how reliable NVIDIA's guidance is. For that, we need to look at this analysis. In this NVIDIA green color, you can see what NVIDIA actually reported. And in this dark blue color or teal color, you can see what they guided for. And you can see that consistently NVIDIA beat its own guidance, and you might call this sandbagging. And up here you can see by how much NVIDIA exceeded its guidance. And you can see that in the most recent quarter they exceeded guidance by 3.9%, or in absolute numbers by 1.7 billion in revenue. I'd like to point out another important aspect regarding Q1. Q1 in NVIDIA's financial year ends in April. That quarter saw the important H20 ban impact that caused a significant write-off and significant loss in revenue. Despite the loss in H20 revenue in that quarter, which NVIDIA told us was 2.5 billion, NVIDIA still exceeded revenue guidance by 2.5% or 1.1 billion. This means NVIDIA would have exceeded guidance by 8% without the H20 ban. I think this is a key observation. It means management cannot be trusted, and I mean this in a positive way. They always sandbag. And that's why even in difficult quarters, they always meet and exceed their revenue guidance. So this is something we have to keep in mind. So now let's look at what this light blue color means. This is the implied revenue based on a prior understating of 56 billion. And it is much more likely that we see a number ballpark in that region than what NVIDIA actually guided for, based on their long track record of significant guidance beats. And you also have to consider that NVIDIA sells to large buyers. They're not selling chewing gum, so these purchases are planned many quarters in advance. And that means NVIDIA's guidance is not a near-term demand derived projection. This is basically an excerpt from their order book. So these are locked. This is basically locked in revenue at this point. In other words, NVIDIA's guidance is not a forecast. It's basically a sandbag number out of their locked in revenue for the next couple of months. Here on this next slide, you see the implied revenue that also reflects some estimation around the H20. And in the comments on the slides, I left the details how this is calculated. But the bottom line is there is even more upside should NVIDIA be able to resolve some of these licensing issues. And on the call, there were some commentary that there is a good chance they might be able to. But because NVIDIA doesn't have to include these upsides and still show phenomenal growth, they, I believe, played it safe and just put out the 54 billion guidance. So the resulting revenue, if there was some amount of H20 sales, is what you see here. And you can see this would be a kind of shocking trend, because it would imply that revenue was up 23% sequentially in next quarter and up 64% year over year, which would mean a re-acceleration in revenue growth. I don't believe that looking at the share price, the market has quite understood what's going on yet. And this is only revenue. There's a lot more when we look down further in the P&L, which you see here on the right-hand side. Next, we need to look at the revenue composition. NVIDIA at this point is obviously mostly driven by the data center business. The only other somewhat needle-moving segment is the gaming segment, but it pales in comparison. So that means we should be diving deeper into data center. And this is what this slide shows you. This slide breaks down just the data center segment into its two components, which is the compute segment and the networking segment. And here is what you see people claim is the reason why the stock sold off. The compute part of the data center segment reduced sequentially, and you can see this down here. It reduced by roughly 300 million quarter over quarter to 33.8 billion. What they ignore is two things. One, this is entirely driven by one-off effects from the H20. And second, there was enormous growth in the networking aspect of NVIDIA. And this is where we'll stop this public part of this long-form deep dive NVIDIA video, since we now move to the very high value aspects of this research. And as I said in the beginning, I have to retain this for my subscribers to be fair. Therefore, if you found this insightful, I highly recommend you subscribe to my research. Thank you very much for listening. See you in the next one. Bye. And for my subscribers, please stay on, since we carry right on. So to figure out what's going on with the H20 and how it distorts the numbers, we need to adjust the numbers. And this is what you see on this slide. So this slide strips out H20 sales from both the most recently reported quarter ending in July and the prior quarter ending in April. All the other quarters shown in this chart are not adjusted, because it's not necessary for what we want to figure out. And that is what is the underlying growth in NVIDIA recently in the compute segment. And this is what you see down here. So if you stripped out in the first quarter of this year the H20 sales, you get to 30.2 billion total compute sales. But if you do the same for, or I should say, in the third quarter, we don't have to do it because there is no H20 sales in the second quarter. So we can now compare the 2 quarters on apples to apples basis, and we can see there was a significant growth of, let's call it non-H20 compute sales, which basically comprises the Blackwell architecture and still significant amounts of Hopper. And then when you look at the implied growth numbers for data center, you can see it's up 17% quarter over quarter, or 6 billion. So the massive sequential increase is driven not only by very strong performance in compute, excluding H20, but also by truly amazing growth in the networking part of the data center business. And I think this crucial insight is lost in most conversations, at least the conversations I've seen thus far on X and other places. But I believe the word will get out very quickly, and that's why I believe we will very soon see NVIDIA testing the $190 range and more. But let's move on, because there are a number of other important aspects that will strengthen the claim for the assertions I just made. Next, let's look at gross profit. Let's look at GAAP first. GAAP gross profit came in at 34 billion, was a massive increase of 27 billion sequentially, but this was significantly driven by H20 effects. Non-GAAP gross profit came in at the same amount, also similar growth rates and similar effects we can see from the H20. So not a meaningful difference between the two. And this chart makes this super clear. Here this compares side by side each quarter's GAAP and non-GAAP gross profit. So this is more like a housekeeping item or kick the tires item. So there's not a big difference in NVIDIA's GAAP and non-GAAP gross profit. This sometimes causes confusions. I just want to cover this point real quick, but we move on now. Now we look at the GAAP gross margin. And as we just established, since GAAP and non-GAAP gross profit is virtually the same, we can skip analyzing the non-GAAP gross margin and can focus on the GAAP gross margin. And you can see NVIDIA is guiding for a meaningful increase, is guiding for 73.3%. But you will also note this is meaningfully lower than in a number of prior quarters. And this gives ammunition to the people who claim that NVIDIA can never sustain these margins, but they're missing something really, really important, and we'll get to it in a moment. And before we do so, we need to check whether NVIDIA's gross margin guidance is reliable. And this is what this chart tells us. This chart in the solid blue line shows us what was reported. And then in the dashed light blue line, we can see what was guided for. And you can see, except for quarters with significant black swans like the H20 ban, NVIDIA always delivers on or exceeds its guided gross margin. So as long as we don't have any black swan type event in the current quarter, it's in my view highly likely NVIDIA will deliver on its guidance. Next, we need to look at operating expenses. Operating expenses grew 38% year over year, quite significant growth rate, and NVIDIA's guidance of 5.9 billion GAAP operating expenses implies a similar year-on-year expansion to a total of 5.9 billion. But absolute OPEX numbers or operating expense numbers mean nothing in my book, and we need to always look at them on a relative basis. But before we do so, we need to split them, or I should say we also have to look at them on a non-GAAP basis, because that makes a giant difference in NVIDIA's case. The non-GAAP OPEX is significantly lower. This chart shows you non-GAAP operating expenses, and NVIDIA guided for 4.2 billion, which also implies a 38% year-over-year growth rate, just as the GAAP OPEX number. But the interesting part is the delta between the two. So non-GAAP operating expenses always comes in roughly around at 70% of GAAP operating expenses, and this gap is almost entirely driven by share-based compensation. And this is important to distinguish when you try to work out valuation metrics, which you have to do for consistency on a non-GAAP basis. So next, let's look at how GAAP reported and guided developed, and how non-GAAP reported and guided developed. And this is what this chart shows you. So the solid lines always show you what was reported, and the dashed lines always show you what was guided for. And you can see in both cases, GAAP and non-GAAP, NVIDIA always meets or beats its guidance. Let's just do a quick interim summary of what we learned. NVIDIA almost always beats or significantly exceeds revenue guidance. The same is true for gross margin guidance, and the same is true for operating expense guidance. With these three items, we can already derive operating income based on management guidance. But before we do so, let's take a closer look at operating expenses, because this reveals a lot about NVIDIA. So first of all, operating expenses were predominantly driven by R&D expenses, which account for a almost shocking, almost 80% of operating expenses. In other words, NVIDIA isn't really a company. NVIDIA is really mostly a research lab. At least this is what these numbers tell me. Because keep in mind, cost of goods sold is to make the product, get it out of the door. And most of that money is spent on supplies in NVIDIA's case, or almost all of it. So NVIDIA is really just spending everything that is directly linked to them on R&D. So I think this alone is also important insight about NVIDIA and how they are significantly different from most of the other Mag 7 stocks. But there is more to this, let's call it OPEX story. And to find out what's going on, we need to look at OPEX, especially the two components, R&D spend and SG&A spend, on a relative basis. So we express R&D spend as a percent of total revenue. This is a very simple metric, but it tells you a lot about the economies of scale or lack thereof of any company. And what stands out in terms of the next quarter outlook, that NVIDIA's management guidance implies that R&D efficiency will improve to a new all-time best of just 7.7%. So 7.7% means this is how much NVIDIA spends on R&D from every dollar of revenue earned. And another way to understand this metric is the lower this percent drops, the more valuable in terms of earnings every incremental dollar of revenue becomes. I should correct it, not only incremental dollar of revenue, but all revenue. So this is a really important metric, and this is a metric I have seen deteriorating amongst other Magnificent 7 stocks, and the main driver is the AI race. So NVIDIA is basically the other side of this trend, because in many ways NVIDIA's strong business performance is the reason that the business performance of the other Mag 7 stocks is reducing, as they are forced to buy more and more NVIDIA product in order to not lose their market cap, as investors grow worried they might not be able to defend their products. For example, Google must defend search and YouTube video to a certain degree. Amazon must defend cloud. Apple must provide iPhone AI functionality. Meta must defend its social media leadership against aggressive competitors like TikTok, but many others, etc., etc. So now we look at SG&A efficiency here, same picture. Management guidance implies NVIDIA will report all-time best efficiency, spending only 2.1% of revenue on SG&A. I think we see really truly kicking in NVIDIA's enormous revenue base. Now we look at the resulting operating income, and as I explained earlier, there are two scenarios to consider. One is scenario A, where we just take the guided revenue plus the add some expectation of H20 sales and assume the high end of the gross margin. So you might call this the upside case implied by management. Again, this is not my forecast. This is basically what's implied by management if you make these assumptions. And then there's a slightly less positive scenario, scenario B, where you assume no H20 sales and a gross margin right on guidance. And the implied operating income is between these two scenarios, 33.9 billion to 36.8 billion. Here on the chart, scenario A is shown, a slightly better scenario, but the scenario which I believe is actually more likely. But again, we're still not in my forecast. I need to repeat, what you're looking at is really what we can infer with minimal assumptions from management. And when you look at this, you can see that this is like a shocking trend for the next quarter. Operating income up likely well over 50% or just under 70% year over year, or a massive almost 30% sequential increase. The other key insight is what you see on this chart. This chart then plots the implied operating margin, and management guidance clearly implies NVIDIA is on track to report the second ever best or strongest operating margin ever reported. And this again will blow this narrative, NVIDIA's margins are imminently collapsing, completely out of the water. And this is before we take into consideration that in the fourth quarter, so the quarter after the current quarter ending in October, the CFO guided for further improving gross margins. This is something she dropped a few months ago in an investor meetup. And you just saw that NVIDIA's efficiency is improving in terms of R&D spend and SG&A spend. So that means we're likely seeing similarly strong or even slightly better margins in the fourth quarter. And I don't think that the market priced it in. Since the net result of all of that is what you see on this slide, this shows you capped shareholders' net income. And this implies a shocking 63% year-over-year growth rate in the scenario A and 51% year-over-year growth rate in scenario B. And this will make NVIDIA the amongst the Magnificent Seven, the company with the strongest earnings generation, even exceeding Apple. But unlike Apple, NVIDIA grows extremely fast, while Apple's earnings are almost stagnating at this point. And we already know, based on the hyperscalers' capital expenditure guidance, that this spending is going to increase for several more quarters for sure. And we also know from NVIDIA that there is another large of super large buyers is getting ready to transact, and this is sovereigns. By their very nature, sovereigns move a lot slower, but once they start moving, we are not talking about small investments, but super large investments. And NVIDIA CEO Jensen Huang talked about this on the earnings call. So that's the end of this, by my standards, quick deep dive into NVIDIA's earnings. There will be a lot more once I was able to update my outlook. I wanted to keep this video relatively short to get it out quickly. So the bottom line is, and as always, is not trading advice. NVIDIA is an epic company. It's clearly not overvalued. And I do not believe this is the time to trim your position. And I believe for NVIDIA to materially pull back, we have to have a significant market sell-off or a negative event nobody has on the radar right now. That is NVIDIA specific. So your choices are: you bet on such unknown events and trim or exit, or two, you let this winner run and compound further. So thank you very much for listening, and if you found this insightful, please don't forget to let others know. Thank you. Bye.